Welcome to The Explainer. Today, we're digging into the key indicators behind Palantir's phenomenal Q4 2025. And let me tell you, they didn't just beat expectations, they completely rewrote them. They've set a whole new bar for what's possible. So, let's break down exactly how they did it. First things first, let's talk about the headline number, the one that made everyone on Wall Street just stop and stare. A stunning 70% year-over-year revenue growth. Now, that number by itself is massive, but the story of how they got there, well, that's where things get really fascinating. So to really get what's driving all this, we're going to follow the money through 5 key areas. First, we'll get a handle on just how big this record-breaking quarter was. Then we'll zero in on the US as the real growth engine. After that, we'll see how that growth is turning into incredible profit, which then becomes a cash-generating machine. And finally, what it all means for their incredibly bold plans for 2026. All right, let's dive in and look at the big picture. What were the top-line numbers that made this quarter one for the history books? This wasn't just a good quarter. It was a total blowout. Total revenue just soared past $1.4 billion. Their U.S. revenue, and this is a key indicator we'll be watching, it practically doubled with 93% growth. And look, this isn't just revenue for the sake of it. They posted a GAAP net income of over $600 million. That's their actual profit, proving this growth is the real deal. And to cap it all off, a record $4.26 billion in total contract value. Just think of that as a sneak peek into the future. It shows their pipeline is absolutely packed. So where did all this incredible growth actually come from? Well, when we break down the numbers, the answer is crystal clear. The United States was the engine firing on all cylinders. And you can see it right here. These are the 2 pillars of their U.S. business, and they had both of them firing at once. The government business on the left pulled in $570 million, and the commercial business was right there with it at $507 million. Both are just massive numbers. And as we're about to see, both are growing at a really breathtaking pace. So the company's traditional stronghold, their U.S. government business, is still a total bedrock of stability and strength. It put up an impressive 66% year-over-year growth. That just goes to show you that its core market isn't just mature, it's actually speeding up. But here's the real story. The thing that signals a fundamental shift is the just explosive acceleration in the U.S. commercial sector. It grew an incredible 137% year-over-year. I mean, that isn't just growth. It's a huge statement that Palantir is making some serious inroads deep into the private sector. Okay, but here's the crucial part. Rapid growth can sometimes just mean you're burning through cash. That is not what's happening here. What makes these results so powerful is that the growth is also incredibly profitable. And that right there is a sign of a truly healthy, scalable business. To really understand this, we need to look at what's kind of the gold standard for software companies. It's called the Rule of 40. It's so important because it just cuts through all the noise and measures that healthy balance between growing fast and actually making money. It's simple. You just add the revenue growth rate to the profit margin. And if that number is over 40%, you're looking at an elite business. So what was Palantir's score? An almost unbelievable 127%. To put that into perspective for you, that is more than 3 times the benchmark for excellence. A score this high is just incredibly rare, and it points to an elite balance of hypergrowth and rock-solid profitability. And these margins are exactly what's driving that incredible Rule of 40 score. A GAAP operating margin of 41%? That's already really strong, but an adjusted operating margin of 57%? That is phenomenal. This number really shows you how efficient the company is and how valuable its software is. Now, this kind of profitability leads us straight to our next key indicator, cash generation. Because, profit's one thing, but actual cash in the bank, that's the fuel that lets a company invest, innovate, and grow on its own terms. And this chart, well, it tells the whole story. Adjusted free cash flow, that's the cash they're making from their core business. It's not just strong, it's accelerating. You can see that clear upward trend right there, ending in that massive spike in Q4. So in the 4th quarter alone, Palantir generated over $791 million in adjusted free cash flow. That is a massive amount of capital to create in just 3 months, and it gives them incredible flexibility to go after their long-term vision. So with this kind of powerful performance across every single key indicator, Palantir now has the confidence to issue some really ambitious guidance for the year ahead. This is them telling us what they think is possible for 2026. And yeah, they're not planning on slowing down. For 2026, they're forecasting total revenue to grow another 61%, hitting almost $7.2 billion. And get this, they expect their U.S. commercial revenue to grow by at least 115%. Basically, they plan to double that business. Again. And on the cash front, they're aiming to generate a staggering $4 billion. So, this all leaves us with the big question, right? Palantir has set an incredibly high bar built on explosive growth, elite profitability, and just massive cash generation. With AI clearly acting as rocket fuel for these results, can they continue to defy financial gravity? Well, 2026 is going to be all about momentum, and we will definitely be watching.